Have we entered a self-inflicted recession, or is this just the beginning of a much larger economic storm? That's the question looming over the American economy in June 2025, as uncertainty and anxiety ripple through every sector. After years of post-pandemic recovery and cautious optimism, the nation now faces a sharp and unexpected economic slowdown. The warning signs are everywhere: GDP contraction, rising layoffs, and persistent inflation that refuses to ease. The once roaring U.S. economy is sputtering, raising urgent questions about whether we're witnessing a fundamental power shift in the global order. GDP has shrunk, the labor market is cooling, and inflation remains stubborn despite the Federal Reserve's repeated efforts to stabilize the situation. Meanwhile, national debt has soared to record highs, casting doubt on long-term fiscal sustainability and the government's ability to respond to future crises. This slowdown is more than just numbers on a chart. It's about real impacts on families, businesses, and the very fabric of the American dream. A crisis of confidence is fueling a cycle of caution. Consumers and businesses pull back, deepening the downturn and making recovery even harder. New trade policies and tariffs have only amplified uncertainty, leaving Americans anxious about what comes next and wondering how long this storm will last. To truly understand the current economic slowdown, we need to dig deeper into the latest data and trends shaping the landscape. Economic indicators are more than just numbers, they tell the story of what's happening beneath the surface. GDP growth, which had shown steady gains throughout 2023 and 2024, has now stalled. In fact, the first quarter of 2025 saw a contraction, signaling a significant shift in momentum for the economy. This reversal is raising concerns among economists and investors alike. The labor market, once a pillar of strength, is now showing visible cracks. Layoffs are on the rise, hiring has slowed dramatically, and youth unemployment is climbing. For many, finding a job is becoming more challenging, and job security is no longer a given. Job growth is now concentrated in just a handful of sectors such as healthcare and retail, while tech and professional services have implemented widespread hiring freezes. This uneven recovery is leaving many workers behind. Inflation, which had cooled briefly, is flaring up again. New tariffs on imports are pushing prices higher at the grocery store, the gas pump, and beyond, squeezing household budgets across the country. The OECD now warns that inflation could reach nearly 4% by the end of the year. Even more concerning, consumer expectations for future price increases are rising even faster, fueling uncertainty. Meanwhile, the national debt has ballooned to over $36 trillion, pushing the debt-to-GDP ratio above 124%. This level of debt is unprecedented and poses long-term risks to economic stability. Servicing this massive debt now consumes a growing share of government resources, limiting the government's ability to respond to future crises or invest in critical programs. Taken together, these indicators, shrinking GDP, a cooling job market, rising inflation, and unsustainable debt, paint a sobering picture of an economy under real and mounting strain. The numbers are clear. The slowdown is broad, deep, and affecting every American, from business owners to families struggling to make ends meet. Understanding these trends isn't just important, it's essential for preparing for what lies ahead and making informed decisions in uncertain times. The slowdown's impact is felt in everyday lives, touching families, workers, and business owners in ways that statistics alone can't capture. In Phoenix, Marco Rodriguez's construction business has dried up. High mortgage rates and tariffs on materials forced layoffs and drained his savings. Once busy job sites now sit silent, and Marco worries about how he'll support his family in the months ahead. In Detroit, the auto industry's EV boom has stalled. Automakers cut production targets, suppliers froze hiring, and hundreds of jobs vanished. Workers who once felt secure now face an uncertain future, wondering when, or if, the industry will rebound. In Seattle, tech layoffs have left skilled workers like Sarah Jenkins jobless for months, with fierce competition for scarce roles. Even those with years of experience are struggling to find new opportunities as companies tighten their belts. These stories aren't isolated, they're part of a national trend, echoed in headlines and data from coast to coast. Slowing GDP, a cooling labor market, and inflation are translating into real hardship. Rising prices at the grocery store and fewer job openings are making daily life more difficult for millions. For small business owners, it's a fight to survive, with many forced to close their doors after years of hard work and dedication. For factory workers, it's the loss of promised opportunities and the fear that good jobs may never return. For young professionals, it's career uncertainty in once booming sectors and the challenge of starting out in a tough economy. Together, these cases show how economic forces are reshaping lives across the country, affecting people from all walks of life. The American dream feels more out of reach for many as financial pressures mount and hope for quick recovery fades. The slowdown is not just statistical, it's personal, shaping the daily realities and future prospects of millions of Americans. The Federal Reserve faces a daunting task: cool inflation without triggering a deep recession. After aggressive rate hikes, the Fed began cutting rates in late 2024 to stimulate growth. But new tariffs are driving up costs, making the Fed's job even harder. Cut rates too much, and inflation could surge; cut too little, and the economy could stall further. Public confidence is plummeting. Consumer sentiment is at its lowest in over a decade. The Fed can adjust rates, but it can't restore confidence overnight. Every move is scrutinized, and the margin for error is razor thin. The central bank is walking a tightrope, balancing growth, inflation, and public anxiety. The stakes for every decision have never been higher. America's slowdown is sending shockwaves worldwide. Aggressive tariffs have disrupted global supply chains, sparking retaliatory trade measures and threatening a trade war. The U.S. tariff rate has jumped to levels not seen since the 1930s, dragging down global growth. The OECD warns that this protectionism is slowing economies everywhere. As the U.S. turns inward, other nations are rethinking their reliance on the dollar and seeking new alliances. America's unpredictability is eroding trust and its global leadership role. The world is watching to see if this is a temporary dip or a lasting shift in power. Decisions made now will shape the global order for years to come. Economic forecasts for the rest of 2025 are grim. GDP growth is expected to remain sluggish, with some predicting as low as 1.6% this year. Unemployment is set to rise and businesses are hesitant to hire amid policy uncertainty. Consumer confidence is at a 14-year low, fueling a cycle of anxiety and reduced spending. Inflation remains a wild card. Rate cuts could reignite price pressures, especially with tariffs in play. The risk of stagflation, stagnant growth and high inflation, is real. Restoring confidence will require more than interest rate tweaks. Washington must provide clear policy direction and resolve trade disputes to break the cycle. Until then, the economy is likely to remain stuck in slow growth and uncertainty. The key variable is confidence. Without it, recovery will be slow. Americans are bracing for tough times ahead. The U.S. economy in 2025 is facing a serious slowdown. GDP contraction, a cooling job market, and stubborn inflation are hitting families and businesses hard. The Federal Reserve is struggling to balance growth and inflation amid unpredictable trade policies. New tariffs have added uncertainty, raising costs and shaking global confidence in America's leadership. The outlook for the rest of 2025 and beyond is murky, with stagflation a real risk. The direction of trade policy and public confidence will be critical to recovery. Staying informed and adaptable is essential in these uncertain times. For ongoing analysis and updates, subscribe for more insights. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.